Everyone in India knows the company ITC, but what if I told you its best part was also its biggest problem? For years, the huge amount of money is made from cigarettes was the very thing that stopped its stock price from going up. This big famous company looked like a great investment, but for a long time it wasn't. Before proceeding ahead, please do subscribe the channel so we can reach 1000 subscribers. Now you will have the question that why we are discussing the ITC. ITC is one of the India's biggest cigarette company and it is very difficult to replace that brand. I'm about to explain why ITC is a household name in India. You probably use Ashirwad Atta, your kids might have classmate notebook and you may have even stayed at their fancy welcome hotels. But for people who invested in the company, it was a big headache for very long time. While other stocks were making lot of money, ITC stock felt like it was stuck. It didn't move for years. If you bought the stock around its peak in 2017, you likely didn't make any money for the long time. In this video, we will look at why ITC, a huge company, got a bad name for being a wealth destroyer. To understand ITC's old problem, you first need to look at its biggest strength, its cigarette business. This part of the business or the company makes a ton of money. It basically prints cash that pays for everything else and gives investor money back as dividend. But here is the catch. The strength was also what held the stock down. Investors know that the cigarette business, even though it made a lot of money, had big risk. First, the government could always add new rules or taxes, which made investors nervous each year during the budget. Second, because it's seen as the sin stock, many big investment groups were not allowed to buy it. This meant fewer people could invest in the company. And third, investors didn't expect ITC to sell a lot more cigarettes in the future. They saw the industry as not growing. The market want to see growth, but the money was coming from a business that seemed stuck. So even though ITC stock was making a lot of cash, the stock price didn't go up because investors saw where the money was coming from as a risky and without a future. If the cigarette business made so much money, why didn't the stock price show it for long? This led to the second and maybe the biggest problem, how ITC spent its money. Think about it like this. What if you made a lot of money but you just put it all in saving account that paid almost nothing? You had get richer but very slowly. For years, this is what investor felt ITC was doing. The company took the big profit from cigarette business and spent it on its hotel business, which used up a lot of money but didn't earn much in return. This is the important case of ROIC, return on invested incremental capital. For every 100 rupees ITC put into the hotel business, it got very little profit back. The cigarette business on the other hand made huge profit. So the business that made a lot of money was paying for one that didn't. This dragged the whole company's value down. Separating the hotel business in 2023 was an attempt to fix this problem, but for a long time it was seen as the place where the company's money just got disappeared. You might be asking, what about the business for everyday product? This was supposed to be the ITC's future, the part that would grow the company and eventually be bigger than cigarettes. The company spent billions over many years building brands we all know, like Bingo, Sunfist and EP. But even though we all know the brands, the business itself was growing slowly when investor wanted it to grow fast. For a long time, it didn't make much profit on each sale compared to its big companies like HUL or Nestle. When sales went up, profit didn't grow quickly, and this was another reason the stock was stuck. Investors saw the billions spent and all the time it was taking and felt the result just weren't good enough. The growth was too slow for the market that loves speed. Only in the last few years has this started to change, with the business finally started to making more profit. So to sum it up, for years ITC had a cigarette business that made tons of money but that investor didn't trust. It had a money eating hotel businesses that gave bad result, and it had a business for everyday product that for a long time grew too slowly for the money it used. Investor punished the stock price because they felt ITC was not just using its money wisely. But what about the dividend? The money ITC pays out to its investor. It's true, ITC is known for paying a good dividend. For years, however, investors saw this not a good thing, but a small gift because the stock price wasn't going up. It was like the company was saying, here is some cashback because we can't make your investment grow. The stock price was stuck because investors didn't believe the company's leaders could use the money to get good result from their new businesses. To be clear, the idea that ITC lost people's money was never about the company going out of the business. It was about the fact that you miss out on making more money somewhere else. For years, your money could have been growing in other companies that use their cash in better way. Between roughly 2017 and 2021, ITC was a classic trap for investor. It looked like a safe and cheap stock, but its price went nowhere. That was the old argument against ITC. But now, with the hotel businesses separated and everyday products businesses making more profit, the big question is, has ITC fixed its problem? Is the company really turning around, or is it too late? Let me know your thoughts in the comment section. Please do subscribe the channel and see you in the next video. Take care. Bye bye.